Welcome everybody to the 40 Finance channel. My name's Jeff Beers. Today I'm going to share some quick thoughts with you on the sort of Reddit Gamestop event that's playing out. Let you know that what I think as a long-term investor, and maybe get your mind churning a little bit when these type of situations come up, how to think about it, and what I actually did yesterday while all this stuff was kind of flaming all over the internet. Reminder, as always, in my stock picks and projections, they're just my opinion for your entertainment. Please make sure you do your own research before jumping into any stock. All right, so just to kick things off, to let you know, I did not participate in any of those trades, in case you were curious. As a long-term investor, they just really don't fit the profile of the kind of investments that I make. However, I was definitely cheering this along from the sidelines, as I think every retail investor was. We're always at a disadvantage with a smaller amount of money in terms of what can be moved in the stock market. And I, for one, found it a little refreshing that the people won, so to speak, for once. It'll be interesting, though, to see the fallout from it when these stocks do eventually go down again. That will be another research opportunity for all of us to kind of learn from what's going on. And anytime you have a big stock market event like this, I always personally try to pause for a second, not only to think about how will this affect my current holdings, but also try to think of where this could spread to other places in the market. Again, it was easy for me to know that I wasn't going to participate in the actual trade that was happening because it just doesn't fit my profile. So once I checked that box off, the next question is sort of like, well, is there any way that this can be beneficial to me? Can I ride this momentum in a different way for the long term in assets that I do believe in? And if you weren't focused entirely on the Wall Street Bets headlines yesterday, there was actually a pretty good buying opportunity. A lot of stocks are down. I think that the NASDAQ finished the day minus 2.5% or so. So there was definitely little pockets of the market. If you were invested in them, you could have saved a couple dollars for the long term. And as I started making this video right now, it does look like the market has bounced back. So the easiest win for me always when there's a negative headline is to go look for immediate buying opportunities. And my next video on this channel will be the stocks that I bought in January, so I'll go in detail about that. All right, so one of the core fundamental concepts that I really thought about yesterday was, how does this change the short game in the future? And as it turns out, I actually have a couple stocks in my portfolio that are pressured quite heavily by short sellers, and that is Rocket and Smile Direct. Both of those stocks went up yesterday, and it gives me a little hope for the future that some of the short pressure that's on those two stocks, as well as many others, will be relieved, certainly over the short term. The game for the short sellers that was relatively simple prior to this week was, they released a thesis and they tried to get people on board to short a stock. I personally don't short stocks, and I believe that you should only bet towards winning, if you will, or placing your chips towards winning, not placing your chips towards losing. That's just my personal philosophy. So what could be a really awesome thing for all of us, if you think like I do, is that the cost of betting on losing just got dramatically higher. I've shown you guys on live streams and stuff before how you can check the short interest of a stock, both on Yahoo and a couple other websites. Well, everybody and their mom knows that now. So there's no hiding out on which stocks are feeling short-term pressure, and the people who are behind those activities now have the added element of surprise if some sort of social media website starts to take interest in it. And I think that that's generally good for the market. All right, one of the other things that I would call out here for when you find yourself in the middle of events like this is that momentum affects stocks in a lot of different ways. So the next thing I would throw out here is sort of like a lesson about momentum And hopefully you guys were studying a little bit of it yesterday. We know what momentum did with GameStop and AMC. That was fairly obvious, right? But it impacted a lot of other nooks and crannies. So for example, the XRT, which is basically the retail sector ETF, the XRT shot up yesterday by an unbelievable percent. All right, so this is the SPDR S&P Retail ETF. Tracks a bunch of well-known names in the retail sector. And this is just a quick, 5-day chart. And what we saw is because GameStop is included in that index, it had a pretty big run up from 81 to 89, and it even reached 94. This is the kind of index fund, as you see on the 1-year chart, and let's just do the 5-year chart. This thing doesn't move every day, okay? This is a slow and steady index ETF, but when you have, 6,000% gains or whatever GameStop had, it makes a big difference for the XRT. I have to wonder how many people out there with just regular accounts holding XRT index fund as well as so many others were surprised that their stocks were up so high yesterday, and most of them probably didn't even know why. And they're going to be even more surprised over the next couple weeks, assuming that GameStop and AMC all come down to earth at some point when they go down. So you saw a lot of people who were complaining about Robinhood is down and I can't trade this, or options have been restricted. But you could have played the same game on XRT, arguably with less risk, because the XRT is certainly not going to go down to zero, and still have the opportunity there. Just know whenever there's momentum in one or two names, more than likely it's going to take away from something else, or it's going to influence something else. And so if the momentum activity doesn't affect your portfolio directly, know that you don't have to go right into the scene, the crash scene, right? You don't have to be right there. There's other opportunities that are in the sort of vicinity of the crash scene that you can take advantage of. In my case, it was everybody looking at one thing, let prices come down on other things, not to mention, I'm sure there were several people who were just stunned by this news headline. So uncertainty in the market, as far as what's going on with this GameStop, that probably pulled prices down yesterday. And I was thinking to myself yesterday, I'm probably the only one who watched Jerome Powell's update from the Fed on interest rates and whatnot. Don't worry, nothing changed. But that to me was more intriguing than something that I just didn't have a stake in the game on. All right, last point here is really, again, thinking ahead. What happens in the future on the heels of this event, right? So we know the stock market changed even just a little bit yesterday from a historical perspective, right? There's going to be lots of opinions. There's going to be lots of people calling things out. And, hundreds of thousands of hours are going to be wasted looking at this event and trying to determine how the world moves forward. What I would encourage you to do is just focus on how the world changed in this event and how it might affect your future trading activity. Does something like this happen in a normal, non-pandemic world, right? Is there enough people on their computers when we're all going to work and college and school and whatever to even make this happen? Does the opportunity even ever come up again that a stock is shorted, triple digits, even more than what was out there available? Probably not for a long time. So don't waste your efforts on the after news, if you will, and don't try to build an entire strategy around this by checking short interest stocks every 3 seconds. First of all, that list doesn't change very often. It changes, I believe, on the 31st and the 15th, or the 1st and the 15th, something like that. Otherwise, the only way that you're going to know that a company is, or a hedge fund's coming out to short something, is if they release a report and they make a big, video to do about here's why we're shorting XYZ. An opportunity like this is very, very rare, and we might see a few pops up over the next few weeks, But ultimately, in the long term, particularly if you're a long-term investor, staying focused on your goals and looking for your opportunities is going to be a lot better than trying to reinvent yourself into a short hedge where you're trying to get ahead of every stock that's shorted. All right, guys, so that's just a different perspective on the GameStop, Reddit, AMC, whatever it was. There's always opportunities away from the main event, right? If there's a football game in your town, there's always somebody who's going to make money by selling peanuts and water and stuff like that, right? So it's not always about feeling stressed because you're not in the middle of it or you didn't get in early. There's always going to be these sub-markets away from the main site that will give you the opportunity to take advantage of what's happening. So the goal here is just to get you thinking about this event and how it could impact your world and what you can do differently. My advice is just to stay on the path to what you're doing. Keep your favorite names close to you. Invest in what you know. This is how you're going to win in the long term, particularly without risking the farm on something you don't know much about. All right, hope you guys enjoyed this video. Thanks for watching. Please give me a like and subscribe if you enjoy this content. We'll see you on the next video.